Hi, I'm Steve Spencer, partner at SMB Capital. Welcome to today's 2-minute trade review with Twitter, TWTR. Today we're going to discuss a trade that has been working quite well in 2013. This is a year where we've seen a lot of momentum and a lot of these social media stocks explode to the upside. Seen a lot of traders get burnt trying to short these on the way up, but the one thing I have noticed is that when these have a 2, 3, 4 day move, they get overextended. If we can identify a good spot on the tape where our risk is very small, those short trades have worked quite nicely, and that's why I'm doing the video today, to give those out there who love the short side, who love the speed of how quickly stocks can go down, a lower risk, high reward trade where maybe they can keep themselves from being burnt on some of these momentum names. Okay, the first thing I wanted to take a look at is this 15-minute chart, which kind of puts in perspective the idea of how extended Twitter was on a short-term basis. If we look at it, the initial break happened when it broke above $42 a share. There was a consolidation period, and it went to 46. And then there was a second move that took Twitter from 46 to 49. And then finally, what I viewed as a third move where it broke from 49 and then consolidated around $52 a share. What happened was the next morning, we came in, it went up a few more points, and was very overextended. It had gone up several days in a row, strong push in the morning. Typically, this is when we look for a possible reversal. I happened to be involved in the stock already. I'd gotten flat in my long position, and I was watching it to see how it would behave at the $54 level. And what I saw was something quite surprising that you don't see that much these days anymore. It involves a skill called reading the tape, something that we teach our traders here in the desk in New York City. At 53.87, a large amount of prints went off very quickly, a few thousand shares at a time. But the offer in Twitter at the time was only showing a few hundred shares. So I knew there was a large seller there who was hiding their size but willing to sell a lot of stock. So I immediately got short the stock, and then I started to game plan my trade. Let's take a look at the next slide. So here's our 5-minute chart. We can see that on here very clearly at the top, after that last thrust up, I identify a seller at 53.87. That initially gets me short. Now the question is, at that point, what is my risk, and how do I want to manage the trade if it starts working for me? Number one, this is 13 cents away from a whole number, and we always know that there's going to be a lot of offers and a lot of supply at a whole number. Not always, but most of the time. And so if I set a stop for right above $54 a share, I'm risking about 20 cents, give or take a few pennies, depending on where I get a print. So I like the risk there. Then the question is, what's my reward? I need to take a step back and start to think about the levels, and I'll actually even flip back to the 15-minute charts to give you an idea of some levels that I was looking at. If we look at the 15-minute, you can see there was a nice consolidation there at $52 a share. So that's a reasonable target, almost $2 below where I'm getting short. I'm risking about 20 cents. It's about a 1 to 10 and very favorable risk reward. Anything over 1 to 5 we love in short-term trading. So flipping back to the 5-minute chart, after you see that first 50 to 75 cent down move where you identify the seller, what's key to this trade really working, and for the more conservative trader, which will give you your entry spot, is how much does it retrace towards the initial seller at 53.87. In this case, it got up into the 53.60s, immediately fell back down, and then took out the prior retracement low. If we look at the 5-minute, that was around 53.20 a share. Once it makes that new low, breaks below that circle there, that's when the sellers start to take control, and the more conservative traders can enter a position, and the more aggressive traders who are already in, they can add to the position if they would like. And then at that point, it's considered a trend. The trend is reversed, and we look to just cover some risk on our way down to $52 a share. So this trade worked rather nicely. Low risk, high reward, one of the few opportunities in a strong bull market and a momentum stock to actually make some money on the short side. Thanks for joining us today on this 2-minute trade review.